Did you know that some equity mutual funds in Nigeria have returned over 40% to 60% in just 1 year? That's way higher than what you'd get from treasury bills, saving apps, or even fixed income deposits. But before you rush into equity mutual funds because you have heard about this, you need to understand exactly how these funds work and how to invest wisely because equity mutual funds also carry some high level of risk. Hello, my colleagues, welcome back to the channel, and if you are new here, you are very welcome as well. In today's video, I'm going to show you step by step how to invest in equity mutual funds in Nigeria using applications like Cowrywise. Even if you're a complete beginner, by the end of this video, you understand how these funds work, how they actually make money, and how you can start building wealth with them without the stress of picking individual stocks yourself or even telling me, Mr. Michael, tell me which stock should I buy. I will also break down the smartest way to exit your investment. Now, quick disclaimer before we dive in. This video is not financial advice. I'm not your portfolio manager. Always do your due diligence before investing in anything I talk about. Everything in this video is for educational purposes alone. Before we jump in, do also smash that like button, subscribe to the channel if you are yet to, and also share this video with someone who might find it very insightful. By the way, if you love to stay updated with what I'm researching, what I'm watching or buying in real time, I share them first on my WhatsApp channel. The link is in the description, and if you love to jump on a one-on-one investment strategy call with me, you also find the link in the description. Slots are limited and yes, they are paid, but if you are serious, the link is below like I said earlier. And without much talk, let's jump right into today's video. Let's go. Alright, so before we even open the Cowrywise app, let's take a step back and understand the basics. What exactly are mutual funds? I want you to think of mutual funds as a pool of money. You, me, and thousands of other investors all contribute money into this pool, and that pool is then managed by professional fund managers. You can say these fund managers are those who their full-time job is just to research, analyze, and decide which investment makes the most sense on our behalf. Now, before we talk specifically about equity mutual funds, let's clear up a big confusion. You see, when people in Nigeria hear the word mutual fund, most of the time they actually think about one type, which is the money market fund. But here's the truth. Mutual funds come in different types depending on where your money is invested. Let me break it down for you simply. We have money market mutual funds. Your money is pooled in this fund and then mostly lent to the government or banks for short-term needs. Because the government and banks almost never default, this particular type of mutual fund is very safe. The returns are steady but not very high. I want you to think of it like a super savings account. It's safe, predictable, but not life-changing. Then we have bond or fixed income mutual funds. Here, the fund manager or the fund invests in government bonds and sometimes company bonds. These bond or fixed income mutual funds usually pay higher than money market fund, but it's still safer than stocks. Then we have balanced mutual funds, which is a mix of both bonds and stocks. The idea is to balance safety with some level of growth. The risk and return are in the middle. And finally on the list, we have equity mutual funds, which is our focus for today's video. This particular fund puts up to 70 to 100% of your money into stocks listed on the Nigerian Stock Exchange. Since stocks can rise or fall daily, this particular type of fund offers higher risk but also has higher potential reward. And that's why you sometimes see headlines like equity mutual funds return over 40 or even 16% in a year. But remember, that also means another year could be flat or even negative. So the big point is not all mutual funds are the same. If you want safety and predictability, money market funds or bond funds are your best bet. If you want growth and can handle some ups and downs, equity mutual funds is what you should be looking at. All right, another big question many people that are interested in equity mutual funds ask is, how exactly do equity mutual funds make you money? Well, there are really two main ways this happens, and once you understand them, the whole concept of equity mutual funds will suddenly click for you. The first way is through something called capital gains, or what I like to call price growth. Here is how it works. Inside the fund are many different stocks, companies like Dangote Cement, Zenith Bank, MTN, and so on. Now, if the prices of those stocks goes up, then the total value of the fund also goes up. Let me paint a clear picture for you. Imagine the fund has 100 million naira in assets and 10 million naira of that asset is invested in Dangote Cement. If Dangote Cement stock price jumps by 20%, that 10 million naira portion is now worth 12 million naira. That extra 2 million naira flows into the fund, which increases the overall value of the pool. Now, here's where it affects you directly. The fund is divided into units, kind of like slices of a cake. The price of each slice is called NAV, which simply means net asset value. So when the total fund value rises, each slice, or you can say each unit, also becomes more valuable. You don't need to buy more units to make money. Your existing units just become worth more. For example, if you bought 1,000 units at 10 naira each, that 10,000 naira invested, if the NAV rises to 12,000 naira, your same 1,000 units are now worth 12,000 naira. You have gained 2,000 naira without lifting a finger. The second way equity mutual funds make money is through dividends. Some of the companies inside the funds like MTN, Zenith, or GTCO share a portion of their profit as dividends, and when those dividends are paid, they go to the fund manager. Now, depending on the specific fund, those dividends are either reinvested or paid out, but most of the time in Nigeria, those dividends are reinvested, which means the fund manager uses that cash to buy more shares of the companies in the portfolio. That makes the fund bigger, and when the fund grows, the NAV rises again, which increases the value of your existing unit in the equity fund. So in simple terms, capital gains grow your fund when stock prices rise. Dividends boost your fund when company shares profit, and NAV is the scorecard that shows you how much your investment is worth at any point in time. Now, how do you invest in equity mutual funds in Nigeria? The first step you want to take is to go to your Apple Store or Google Play Store to download the Cowrywise application. Once you download the app, the next step is to quickly sign up or sign in. If you don't have an account, I'll say you should sign up. If you already have an account, let's just sign in, because me, I have an account, so you just have to sign in. So once you're logged into the app, what you want to do is to click on here. You actually have to fund the account first, right? Well, you click on here that says invest. So when you click on here that says invest, you click on the place that says Naira Funds. You click on Naira Funds, then come to here that says new investment, and then you can now see there is a place that says managed portfolio and individual mutual funds. You click on the individual mutual funds, and you can see the different mutual funds they have. They have the conservative, they have the moderate, and they have the aggressive. We want to go for the one that says aggressive, because most of them, this is the equity mutual fund, the aggressive one, because most of what this particular fund invests into is equities, because it's what offers the highest risk to reward, right? And that's why it's tagged aggressive. And as you can see, you have the ARM Ethical Fund, which has returned 40.52% year to date. You have Meristem 37, ARM Aggressive Growth 38, and then you have United Capital 42, AfriInvest 46. What we want to go for is the AfriInvest Equity Mutual Fund, because it has brought about the highest return. You can still go for the lowest ones, because there are high chances that it could still bring in more returns, right? But I rather go for the highest one. So you click on AfriInvest. So once you click on AfriInvest Equity Mutual Fund, you click on 10,000 naira, which is the amount I want to invest with. You can, if you have more than that, you can go with 50k. It's up to you, but just click on 10,000. Click on here that says invest now, and there's this button that says invest my dividends, meaning once if the equity mutual fund pays dividends, it will be automatically invested back into the fund for you. If you don't want that to happen, you can click on here that says off, and then it turns it up for you. But I prefer to reinvest my dividends, so I put it on. So one thing you need to know while buying this equity mutual fund is that what my 10,000 naira can buy me is just 16 to 18 units of this fund. So it means that I have just, you can say 18 shares in this fund, just 18 units, right? So that's one thing you need to understand. And you can now go ahead to click on here that says choose payment method, and click on the place that says bank transfer. Click on, you can still decide to see breakdown. When you see breakdown, you can see that the value of what you're investing is 10,000 naira. You're buying 16 to 18 units, and then the processing fee is 150 naira. If you're okay with that, you can now click on here that says pay 10,150 and a bank account that you need to transfer money to, the next 60 minutes appears. If you don't transfer this money within the 6 time frame that is ticking down, it will expire and you will not be able to invest in this equity mutual fund. So what I have to do now is to go ahead to transfer the money and then click on the button that says I have paid. Once you click on I have paid, they will say Smart Choice will confirm and process your investment between or within 1 to 2 days. And you can now click on the place that says view investment. So when you click on view investment, once the investment has been reflected, you'll be able to see your balance, your current balance, and some other details, right? And you can see here that says automate. If you want to automate the investment, you can click on automate, and they will now start taking money from your account, either weekly, monthly, is all up to you. But this is just the foundational level of investing in equity mutual funds right here in Nigeria. All right. So now you know exactly how to get started with equity mutual funds on Cowrywise, from choosing a fund to actually buying your first unit. But here's another question people usually ask me. Okay, Micah, if I ever need my money back, how do I exit? On Cowrywise, you can sell your units anytime. When you sell, the proceeds first go to your Cowrywise wallet, and from there you can transfer that money to your bank account. Depending on the fund manager, withdrawals can take between 2 to 5 business days before settlement. And that's it, my colleagues. You now understand what equity mutual funds are, how they generate returns, how to invest in them step by step with Cowrywise, and even how to exit when you need your cash back. If you found this video helpful, do me a big favor by smashing that like button so more people can discover it. And don't forget to subscribe to the channel and turn on the post notification so you get notified when I drop more insightful investment and finance videos like this. Also share this video with someone you know who has been confused about mutual funds. And trust me, they will thank you later. By the way, if you like to see what I'm researching, watching, or investing in real time, like I said earlier in the course of this video, join the WhatsApp channel. The link is in the description and pinned comment. And if you want to work with me one-on-one, link is in the description and pinned comment. And until next time, my colleagues, they will.